What if I told you that one company is sitting at the very heart of the world's most powerful technological revolution, and its influence is so vast that governments are fighting over it, industries are reshaping around it, and investors can't take their eyes off it? That company is Nvidia. This isn't just another chip maker. Nvidia has become the backbone of artificial intelligence, the key supplier of advanced computing power, and the stock that symbolizes the AI arms race itself. But as with every giant, the road forward is filled with both staggering opportunities and serious risks. So today, let's break down where Nvidia stands, what challenges lie ahead, and whether its stock can continue its meteoric rise. Welcome to Big B Stock, your daily source for U.S. stock market updates, trends, and insights. Stay ahead, stay informed. Subscribe now for daily update. First, let's talk about dominance. Nvidia's graphics processing units, or GPUs, are no longer just for gaming. They have become the core hardware powering artificial intelligence models, data centers, self-driving cars, robotics, and high-performance computing across industries. In fact, without Nvidia, many of the breakthroughs in AI, from language models to image recognition, wouldn't even be possible at the speed and scale we've seen. That monopoly over the highest performing chips has made Nvidia the undisputed king of AI infrastructure. But here's the twist. Dominance comes with attention, and not just from competitors. Governments around the world have noticed Nvidia's power. The United States sees its chips as critical assets that must be protected. China views them as essential imports for advancing its own AI ambitions. And Europe, too, is scrutinizing how Nvidia's acquisitions and pricing impact competition. That means Nvidia is caught in the middle of a geopolitical chess match. Each regulation, export control, or antitrust probe has the potential to shift its global revenue outlook. Take the recent drama with China as an example. Beijing has accused Nvidia of antitrust violations linked to its Mellanox acquisition years ago. On paper, that sounds damaging. But in practice, many analysts argue it's more about political leverage than real business risk. The timing, aligned with U.S.-China trade negotiations, suggests this is a bargaining chip, not an existential threat. Still, it highlights the fragile balance Nvidia must maintain as it straddles the world's two largest economies. Meanwhile, the demand side of the story is explosive. Every major tech company, from Microsoft to Google to Amazon, is racing to secure Nvidia chips for their data centers. These companies aren't just buying hardware, they're buying the future of their businesses. Without cutting-edge GPUs, their AI projects would stall. That insatiable demand has created backlogs and waiting lists, pushing Nvidia's sales numbers into the stratosphere. At the same time, companies like Broadcom and AMD are trying to carve out space in the market, but so far, Nvidia's lead remains formidable. Yet even with this demand, investors have one major concern: valuation. Nvidia's stock has skyrocketed, turning it into one of the most valuable companies in the world. The question now is whether its earnings can continue to justify such a high price. Bulls argue that this is just the beginning, that AI adoption is still in its infancy, and Nvidia will continue to deliver massive revenue growth as industries build out infrastructure. Bears, on the other hand, warn that no company can stay this far ahead forever. They point to the risk of supply chain constraints, the potential for government restrictions, and the eventual rise of competitors who may erode margins. Another key factor to watch is the Federal Reserve. Why? Because interest rates directly affect how growth stocks like Nvidia are valued. If the Fed cuts rates, liquidity improves, borrowing becomes cheaper, and growth companies get a tailwind. That could give Nvidia another leg higher. But if rates remain high or if economic growth stalls, high valuation stocks are the first to get punished. So, Nvidia's short-term fate is tied not just to its own execution, but also to the broader monetary environment. And then there's the bigger picture, the AI arms race itself. The U.S. wants to ensure its companies control the most advanced computing power, while China is scrambling to catch up and reduce dependency on American chips. This rivalry guarantees that semiconductors will remain at the center of global politics. For Nvidia, that means constant volatility in headlines. One day it's about export controls. The next day it's about antitrust probes. But through it all, the underlying demand for AI hardware doesn't stop. The world simply can't build the future of AI without Nvidia's technology, at least not yet. So, what does all of this mean for the stock? In the near term, Nvidia may face pullbacks and corrections. Geopolitical risks, regulatory noise, and stretched valuations could create turbulence. But over the long term, the story is still one of dominance. Unless a competitor can dethrone Nvidia in AI hardware, a task that seems monumental right now, this company remains at the center of one of the most transformative shifts in modern history. Investors should brace themselves for volatility, but also recognize that Nvidia is not just another tech stock. It is a strategic asset, a geopolitical pawn, and the engine of artificial intelligence innovation. Whether you're bullish or cautious, one thing is clear: the Nvidia story is far from over. The next chapters will be written not just in earnings reports, but in trade negotiations, technological breakthroughs, and the global race to define the future of AI. This was Big B Stock, bringing you the latest updates from the U.S. markets. Don't forget to like, share, and subscribe for more.